Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, hey guys, welcome. I think my camera is a little bit blurry, or is it touching up? Sorry about that. I think it's touching up my appearance. Hold on. Yep, it is. That's much better. Okay. All right. Why is it that I feel like I'm not prepared here? All right. Yeah. Welcome to another live stream, guys. I'm gonna share my screen and let's just jump right into the first stock that I want to go through. So what I want to do this evening is look at some stocks that I've been keeping an eye on, that I've been seeing talked about in the Telegram group, talked about in some other places, and I just want to have a look, see what's happening, and see what you are saying as well. So let me know which stocks you have an eye on for the rest of the year and what you think is going to be happening with companies that you're watching. So this is not the stocks to watch for 2025 as yet. That's coming out closer to the end of the month. I'm going to be doing it as separate videos. And yeah, you can let me know your thoughts on that when it comes out. But first one I want to look at, of course, is TransJamaica, one that we've spoken about a couple of times. So you should know this one very well. So year to date, it's up 27%, which is good. And we know that their last report came out in August. So not as waiting to cover them after the report came out, but not quite yet. So, and they would have announced their dividend. So if you missed that, there's a dividend declaration that was paid just last week. So hopefully you got that dividend if you are a shareholder, and hopefully you're going to reinvest that dividend, right? So that's that. In terms of how the price has been moving in maybe the last month or so, relatively the same, hasn't moved much. You see the line is almost flat here. A slight peak early in the year, so I think 373. Let me do year to date. I think early it went to almost 373 this year, but that's about it. Haven't really seen it go past that after it came back down. So maybe right here, it looks like it maybe went to 350. Now, I think that TransJamaica is just a solid stock right now for more than one reason. You've heard that before, so I won't go through that part again. But I'm watching to see how things kind of progress for it. So this is definitely the first one I was looking at. Let me check their report here. Let me just glance at the last one. All right, guys, this is a live stream. It is late, so let me know who is here. Let me see over IG. The Diplomat on Instagram, is TransJamaica still a buy? What do you think? Let me know what you think first, and then I'll share my thoughts. So this is their Q2 report. So second quarter. So all the reports I look at tonight, I'll probably focus on profitability, as in profit and loss, and then MD&A, unless I really feel like I need to look at something on the balance sheet. But these are quick reviews. We're not necessarily going to get into anything deep right now, because I want to cover at least 4 to 5 companies within the hour. So let me know if you have any questions. Let me know which company you want me to look at for the next few minutes, and then we can go from there. All right, so Ashton, welcome. Humble Boss, good to see you. as usual. All right, so it says here toll collections. So if you look at toll collections from 2022 is actually, it went up 20%, and then it went up just about a little under 10%, it looks like. So year on year, 9.5%. Net profit and loss is the highest it's been, I believe. I'll have to double check that. And debt service ratio is 2.9%. I'm not going to go into those, but probably should have a video just on that. So this is revenue by toll plaza. So you're seeing here the increase over time. So Portmore is actually hasn't increased much, which can be a little concerning, I'd say. This one that says Vineyards has been growing nicely. And then, of course, you have Mailpac increasing slightly year over year, right? So you'd love to see this continue to grow in terms of revenue. And let's see if they have an outlook here. They don't. This is new rates effective July 6th. And we know that, for example, they have not started to collect for the Williamsfield toll as yet. So I think that's going to bode well for them. I think that's a good thing when that comes on stream. So let's focus on the 6 months for the year. 39 million US here. And operating expenses slightly increase, about 10%. Admin expenses about 15%, that looks like. Finance costs relatively the same. Net profit though, up almost 3 million. So that's certainly good to see. So the EPS earnings per share is up. All right, so good to see that. So I mean, I think again, not much has changed here in terms of TransJamaica and outlook. So it's certainly not moving off my watch list for now. I have not moved my position at all. It's staying the same until there's something that has changed fundamentally about the company. All right, so let me see what you guys are asking for in the chat. So I see CPJ, I see SGJ Sagicor. SGJ. Well, let me do them in order. Let me do CPJ first. From Humble Boss, since you were in fact here first. All right, so CPJ has been down a while now, right? I remember when it was so earlier this year it was almost $12, and now it's below 9, so that's at least a 25% fall from there. Year to date, it's still up 2% in the last year. It's been as high as $14. That's concerning, but I haven't been looking at the company, so I mean it may be an opportunity, right? So let's see where they are in terms of revenues. So revenues for Q1 2024 was down compared to the previous year. Revenues for Q2 went up. Earnings for Q2 went up, sorry. And we're not seeing Q3 or Q4 as yet, but things, I mean, looking at this, let me check out their report. I'd say things not looking so good for CPJ, Humble Boss. Well, let me keep looking and see what the report is saying. All right, so the diplomat saying I will buy TJH till forever. Got in at $1.40 and wish I had built up my position at that point. Still on the DC, but I mean that's not a bad option at all, for sure. All right, so the last report was Q2. So let me check that out and see. All right, so since I haven't looked at the company in a while, I'll read this report because I don't really know what's happening with them. So it may make sense to give it a read and see. So the group's operating revenues were 40 million US. 2022 was 38 million for the quarter that ended, representing an increase of 4% over the previous year. Earnings before tax was 2.6 million US, an increase of 291,000 US or 12.5%. The company experienced a 1% rise in margins compared to the previous year. This upturn can be credited to strategic procurement practices despite the fluctuation in commodity prices. And then, of course, admin expenses has increased. I think everybody's admin expenses have gone up, including mine. So it happens all across the board. So they anticipate that the increase in revenues and enhancement of margins in the future will result in continued improvement performance for the company. The revenue improvement during the quarter was driven by the introduction of new product lines, along with continued development of existing sales channels in their online business. So corresponding to the increased revenue, selling and increasing compared to previous year. Okay, let me scroll through that. Okay, outlook. As we look forward to a busy third quarter of the year, CBJ will continue to strive to provide the highest level of service and quality products, ensuring the success of their customers and shareholders. We're of the view that the current environment, characterized by supply chain challenges and potential disruptions arising out of the conflicts along the supply routes, will continue to cause logistics challenges and increases in freight costs, right? So I think that's an important thing to note. So we're seeing admin costs go up for companies, and we're seeing so admin costs going up and freight costs going up. So the companies in your portfolio that may need to ship items, bring in equipment, raw materials, etc., there may be a challenge there. And companies that is at an advanced stage of work in the expansion of their manufacturing plants and other operational areas, which when completed give them expanded capacity to deliver improved efficiency for their business. Sorry. Energy saving system. I'm just scrolling through here. Okay, so they're projecting an increase in sales, the completion and commissioning of their expanded manufacturing plant, and improvements in the general environment and opening of new stores. They anticipate growth in profits for the upcoming period. So I'd say, let me say latest news in case I miss anything here. So their annual report is not out. That was delayed as at October 30th. So I remember this announcement about L.E.A.R.N taking a stake. I thought that was a good thing. So I thought that this announcement was good because we've seen that essentially I have confidence in the L.E.A.R.N team to be able to turn things around for CPJ. So just on that fact alone, Humble Boss, I would say that's actually a good thing. This strategic stake. Let me see what it says here quickly. Okay, it's gonna be appointed chairman effective July 2024. So I'm thinking that this will mean that, because I've seen Seprod essentially build out a really nice business. L.E.A.R.N, as you guys know, overseas and is able to do business across the region. So I think this is a good thing for them, right? It may reflect down the line for them. So based on where it's trading at right now, I don't know if you'll see the turnaround right away. Let me look at, did we look at their profitability yet? Gross operating revenue for the 6 months, the marginal increase to 74 million. Is this in USD? Not sure, but their EPS remained the same. Profitability right around the same. So I mean, I think with the new team members of the Richard Pandoe and the A.S.Bryden team, it will bode well for them long term. That's what I think anyway, because I've seen Separad, A.S.Bryden, etc. just build some solid businesses. So maybe they can leveraging of partnerships, access to new markets, etc. All of those things could potentially be in the pipeline for them. I don't know how soon those things will come into play, but at least that announcement alone would give me confidence in that, is what I would say. I don't think they announced anything else recently. So, but it's been an interesting journey in terms of volatility for sure for them. Humble boss is what I'd say. So let me see what else. Oh, Nicole, unfortunately, I'm not going to be able to look at Carreras. That's one of those companies that unfortunately I will not review. So Carreras, SVL, guys, unfortunately, I can't look at those. But let me see what else is there. Antoine, SGJ is Scotia Group. Okay. Who was it who was talking about Scotia the other day? Let's have a look here. 6 months, year to date. So it's been up 17% year to date, almost 18. More or less the same price range within the last year in terms of that peak. So it went as high as $47 within the last 12 months, and it's now at 45. So it's relatively within the same range. Let me see earnings here. So it seems like their Q2 is due. Based on what I'm seeing here, they didn't do as much as Q1 last year, right? So it's about 200 million difference. But what I would say to that is that I think the financial sector, due to the financial sector, I just don't know if you're gonna see any of those companies wowing you right now, just based on how things are. But that will certainly turn around one day. Shell said, due to how we should have only have 5 to 10 stocks, this is just for entertainment. For sure. For sure. So we can always review stocks, even if they're not in our portfolio, because that's what our watch list is for. So even though I have 10 stocks between me and Renee, we have a watch list that's maybe about another five stocks I'm looking at to see, how things shape up for them. Let me try and look at Scotia's report. Hopefully it's not, I know sometimes the financial statements for finance companies can be a little bit crowded in terms of detail. But let me, larger shareholder, where's the report itself? Let me open one of these, because this is top 10, which I thought, let me see this one. That's their dividend. Okay, so this seems like a summary of the report. I really probably should look at Scotia a little bit more now. It's not a company that I pay a lot of attention to, I'd say. So total loans increased by 35 billion or 14%. That's good to see for them. Indicating strong demand for their products and services. Their commercial solutions are best in class, and they continue to see increased interest from their business clients, as evidenced by 8% growth. So I think any segment that serves business clients is in for a good opportunity right now, I'd say, right? Because for businesses to stay afloat, they're gonna need funding. So companies like Dollar Financial, who we know give loans to a lot of entrepreneurs and small businesses, etc. I think it's no surprise that that segment is growing for them and will continue to grow, because businesses are going to need capital to weather the storm of maybe slow slow business or to expand, things like that. So the retail side business, it performed well with a 13% increase in Scotia Plan loans, and the mortgage portfolio grew 24%. Now, I think this is interesting to see, only because what I've seen, or what I am seeing, is that I don't think persons are slowing down in terms of their willingness to take loans, their willingness to shop. I don't really see anything slowing down. I don't know how you guys feel about it, but I think it's interesting to see that it's kind of been business as usual, especially in the real estate market. So we'll see how that goes, but I thought that was an interesting fact to notice, right? And then they've made a solid contribution to overall performance of the group, increasing by 10%. That's Scotia Investments. Their funds are performing with their premium JMD fund and premium USD index fund ranking among their peers. Okay, let's see. Insurance premiums increased by 7% and number of policies grew by 24%. There's been significant growth in digital sales. So it seems like the business is doing well for them, but let's see what the numbers say when we get there. So total revenues grew by 3.5 billion to 30 billion, 13% increase over the year. And other income, net fee, yeah, it seems like I'm gonna have to do like a full review. I don't think I'm doing it justice by doing a quick review here, so please forgive me for this, but I have a lot more companies that I want to go through. So let me just go straight to, let me look at is this for the period ending? Okay. So let me see here. No, well, I think this should be their half, right? Are we in the half? Yeah, I think I might have missed something here. I think this is their breakdown across. Yeah, I'm gonna have to do a full review here. Who wanted Scotia? That's Antoine. Yeah, let me look at this in full, because I don't want to just skim over anything that may be important to cover for them. So I promise to do a review for them sometime soon, because when I did the NCB review, I went down the different business lines, etc. And I probably think it should be the same for Scotia here. But generally what I'm looking at for the financial stocks is just to see how they're doing in terms of their performance based on coming out of the pandemic, well, before the pandemic, and seeing how well they're comparing to pre-pandemic levels is what I'd say. Yeah, cool. So let me see. All right, John Walker, I'll check out Mailpac. Let me share again. All right, so Mailpac is, so we're seeing some growth. So with Mailpac, let me do year to date here. So they would have started the year at 226. So being at almost 260 now, that is growth. Now we know that they would have done the is it considered an acquisition? Yeah, they did the MyCart Express acquisition. I believe they said it has to go until the end of the year to confirm if they're gonna go through. I think they said they're gonna watch to see how things went. I don't remember. So let me, because I know they had that early in the year. So let's see their their Q2 here. But Mailpac, I think, is in an interesting place, right? Because I think I was waiting to see how the increase in threshold did for shipping companies, because I can tell you, I feel like in terms of personally, well, there are some things happening personally, but I'd say I'm noticing even in my own home, there's a lot of shipping taking place. So I feel like the industry, especially because of that $100 limit now, there's a lot of like small orders happening. So I think, let me know guys if it's the same for you. Are you ordering more online since the threshold has changed? Is that something that you've noticed? Because I certainly notice it for me here and in terms of my family, right? So let me know if that's changed for you. So Mailpac, they would have done the acquisition for MyCart Express. So it says throughout the quarter, they focused on integrating MyCart Express. That's what they said they would be doing. So it was fully absorbed as at April 1st. With the second brand, they're better positioned to expand their market share and customer affinity by positioning each brand to serve its core market best. Mailpac being that more of a high-touch, service-driven client, and MyCart Express for the value-driven, budget-conscious customer. And guys, I've been seeing MyCart Express open a lot of locations, right? If you follow them on social, I believe at least 4 or 5 locations they've opened this year. Now, I don't know. Now, I haven't been able to interview the MyCart team, but on one hand, I see that as a good thing, them opening location. So I mean, I guess their location doesn't have to have a high cost. I'd be curious to see MyCart Express financials, right? But I think we're not gonna see them broken out separately, I don't think. And I think the price for it had come out at some point. I'm not sure. Right? So financial performance, they saw a 54% increase. Of course, that makes sense based on the acquisition. This growth was driven primarily by the strategic integration of MyCart Express, but was also positively impacted by continued robust performance of core brands. And then gross profit for Q2 stood at 262 million, representing a 31% increase. So I will say to you that I did think that for Mailpac, with the acquisition should come increased profitability, and Mailpac, I think, was a reasonable dividend paying stock. I don't know if they're considered to be in the highest anymore. I don't remember, but I know they do pay a dividend, and I do know that that was one of the things I was expecting to see from them, to see if the dividend would have gone up after, of course, they've had some time to benefit from the acquisition. All right, so notice they're mentioning slight increase in freight rates. We saw that for CPJ. It's saying that said, the gross margin for the company fell due to integration costs. So that integration cost should be a one-off, I imagine, because once integrated, you don't need to incur those costs again. So operating expenses were 220 million and 95% increase. Okay, I guess again that would be fixed costs relating to their 13-store operation. Okay, we got the number of stores, that's good. And meaningful acquisition and integration costs, including legal fees, personal training, system upgrades, and restructuring initiatives. Cool. While these expenses resulted in a 75% decrease in net profit, they represent necessary investments. Okay. I see it now. All right, so John Walker, what I'm seeing, I haven't looked at the numbers yet, but what it's sounding like here is that, of course, based on the costs being incurred for the acquisition in Q2, their profitability for that quarter is going to be low. However, I think, of course, they should pretty much get back to normal and probably increase what their average profitability would be. That would be my assumption there. It says for the outlook, Q2 marked the first quarter following the acquisition. This period allowed them to assess the performance of both brands simultaneously and begin the integration process. They're confident that decision will bring both brands under the same umbrella, will position them for continued growth, industry leadership, and future success in e-commerce. That doesn't give me much, right? So I guess we just have to see how it progresses there. But let me glance at their balance sheet. So property, plant, and equipment, of course, gone up. Intangible assets gone up, I imagine, because of software and probably other things. Trade and receivables gone up here. Cash and bank balances about the same. Share capital, shares to be issued. Okay, that's 137 million shares to be issued. Accumulated surplus. Okay. All right, so let's look at revenues here. So it did say so. The overall revenue for the 6 months is higher here, of course, because of the acquisition. Cost of sales is that net gross profit is higher than the 6 months last year, but I think, of course, the percentage may be lower. I may be wrong there. And based on, so their admin and general expense costs based on acquisition would have, is that a doubling? 193.80. No, not quite a doubling, but close. Well, would that be close? 75% thereabout. And so operating profit is down. Then, of course, profit before taxation would be down as well. So EPS down, but again, I think that's going to be one-off for them because, of course, once those costs have been incurred, they should pretty much, I think, go back to where they were before. But let's see. It's interesting, I'd say, to see. Let me check Instagram to see which stocks you guys want me to go through. There is one I wanted to talk about. Let me tell you which one that is. So I wanted to see Lasco, right? Because of course I would have seen that in the group today. So Lasco caught my attention in the group chat today. So let me have a look, and then I'll take one more before I close this out. All right. So if you guys have any questions for me, let me know. I'll try to answer as many as I can. And yeah, let me know if you have any investing questions. So I do like tropical, I'll say, Antoine, right? We did an interview with the CEO earlier this year when they first did the acquisition of Rose Batteries, and we did an earnings call with them as well. I've said for them, I think, so similar to the acquisition with Mailpac and MyCard Express, I think with Tropical, once they're going to do an offer before the end of the year, once they do that offer, their finance cost should go down. Now, we don't know how much shares they're going to issue as yet. So you have to kind of factor that in to see how the EPS will be affected. But they are expected to be more profitable once the finance costs go down, because I believe the finance costs were close to 100 million, right, for the last report that we looked at. And I think they're going to be picking up momentum in terms of the partnership with Rose Batteries, and so we may see things just look very different. So Tropical is one of those companies that I really like, I'd say, right? Yeah. So Ashton Express Caterers, let me see if I have time to go through it. If not, I'll probably just bookmark that and have a look when I can. But yeah, I don't know how many of these I'd be able to cover in an hour. But who knows? Maybe I stay longer than an hour. Let me see here. All right, yeah, so I know that Lasco caught my attention, of course. So I just had to have a look and see. So I'm going to ask you guys to take a minute to like the video. 30 persons here on a Friday night. Just take a minute, hit that like button. It helps out the channel a lot, and it makes me feel like all the work I'm putting in is worth it, right? Just that like makes me feel a whole lot better. All right, 6 months. So we know that Lasco did a migration to the main market earlier this year. And I'm seeing here year to date. So they've started the year at $4. So they're almost double. 460, 920 would be double. So they're almost doubled, right? So probably close to being the best performing stock year to date. Has anything gone higher? No. So this quite possibly maybe the leader for the year right now. I'm not sure. I'd have to look into that. But that's certainly worth noting. So let us see here. Let me check out their last report. So 3 months, also Q1. So I really like Lasco, right? Extremely biased, I must say. Lasco is a client, full disclosure, but of course that's not gonna skew my review, but I really like the company, what they represent, how they do business. I like all the plans that are here. There was an interview. So I did an interview with James Rawle, and Mayberry did an interview as well. I think both were really good. So I'd check that out if you're not familiar with the Lasco companies. You have L.E.A.R.N and you have L.E.A.R.D. So this is L.E.A.R.N right now. And yeah, very, very interesting, very well-run company. So as I said, I'm biased, but that bias is with good reason, because I don't think I've seen even the way that the company does business. I think is just, you know, high value, high quality. So I'm just listening. It sounds like somebody was outside. Oh, never mind. All right, so sales revenue grew 15% for Q1, and gross profit increased by 16%. Selling and admin expense, again, I said this, guys, for every single company, just expect within the last 2-3 years, selling and admin expenses would have gone up, except if the company is downsizing, right? Operating profit was 35% above prior period. Profit before tax was 975 million. Net profit increasing 33%. That's amazing. That's amazing, right? EPS is up compared to the previous period. Assets are up. Inventory values up. Cash balance is up. Did they pay a dividend? Pay a dividend of 15 cents. How is that yield? I think I asked Mr. Rawle if the dividend will increase, and I think he was asked about it on the Mayberry forum as well. Guys, watch those interviews. Very, very good. Again, as I would have said. All right, so let's see what the outlook says. We project that we could continue to experience headwinds, particularly around supply chain disruptions. Again, it would affect manufacturing company for sure. Climate change impacts, hurricanes. We did have the hurricane. Yes, we did. Considering these, we will remain proactive in instituting mitigating measures to minimize potential negative effects. That's all you can do. Outlook doesn't say much. The outlook doesn't say much there. All right, so let's look. So revenue is up here. We saw that. Oh, this is 3 months. Do they have the 6 months? Is it Q1? Am I looking at Q1? I don't remember. I think so. Yes, it's Q1. So never mind. So gross margin 38%. So comprehensive income went up. So like I'm just amazed, right? The company is doing 700 million in profit for a quarter, right? That's amazing. You see here, PPE still the same. Capital work in progress, long-term investment, inventories, trade and other receivables, related companies, cash. Well, yeah. So, I mean, I said I'd focus on P&L. I mean, that's very good for Q1, I'd say. And so I haven't looked at lastly, but yeah, I mean, let's see, right? Because I know there was talks about a possible merge other companies. I don't know what that looks like. I think that's one of the questions that was asked on the Mayberry forum. I need to watch that interview again, but I'm certain it certainly piqued my interest, having risen so much. So month to date is up 3%, but year to date, as I said, 70%. Likely the best performing stock this year. And it's interesting to see here. The volume has there's certainly been a lot of activity in terms of trading, right? And you're seeing just you're seeing that in the chart. All right. So yeah, very interesting. So I just wanted to cover that. What else? Cherry brandy. I don't know if I can look into Seprod right now, but so let me pin Seprod Investopedia. I see GK. I see Seprod. I see Tropical, which I spoke about briefly, and Express Caterers. I'm sorry, guys. I don't know if I have enough time to go through that because I do want to take some questions. If you do have any questions for me, I can take a few before I sign off. Can take a few. So let me know if you have any investing questions. I can take one or two before I close. Anything you want to know about process of investing, anything relating to that. So let me stop sharing for a second. Let me check our news feed as well. See if there's anything that I need to check out. All right, so I'm just looking at our news feed. Give me 1 second. I'm just scrolling through to see if anything pulls my eye in terms of announcement. All right, I see something about Carib Cement. Let me pull that up here. So just looking at news now. We're not doing any stock reviews necessarily. So as a Carib Cement to resume exports to CARICOM. So they've not been able to meet. Oh yes, I do remember this. So there was something that came out about Carib Cement not being able to meet demand, and I thought that was interesting because persons were talking about, maybe there should be other persons allowed to be in the space and so on and so forth. Says it's now on track for expansion plans to resume exporting its products to the wider CARICOM by first half 2025. So just from seeing this story, what I would do is look at their performance and see if they're poised to have maybe some growth there. The current expansion program, which will satisfy 100% of Jamaica's current market needs and allow for exports across CARICOM, is well advanced and on track. So I have been trying to get an interview with Carib Cement, by the way. I have not been successful as yet. So hopefully I'll be able to get that soon. All right. I'm just doing a quick scan through. Okay. All right. So not much else there. All right. Question from Akeelia. When you have a company on watch list, how do you decide when to actually invest? Great question. Okay. So what I look for, the simplest way I can tell you that I look for, I'm looking for, so there are a few things that go into that decision, right? So I'm investing based on a goal. So let's say my goal is, let's say I want to build up my long-term portfolio, because my only goal currently in this climate, in this market, is to gain income. So I'm looking at I'm looking at dividend opportunities. I'm looking at some opportunities for cap gain, but I probably use dividend capture to see if when I'm getting a dividend, if the stock price is able to go up, and then I can benefit from maybe a 10 to 20% in the short term. So let's say that we're talking about a long-term option here. All right, Akilia. So let's say that let's say what I'm trying to think of one of the companies I'm looking at for long term. Yeah, so let's say there's a company I'm looking at for the long term. Let's say the company has had a fall off in terms of their revenues, right? So haven't been doing well as they normally do. Let's say this climate is causing them not to do well, right? High interest rates, high admin costs, maybe they're impacted by shipping costs, who knows, right? But revenues are going down, profits are going down, but I think it's a seasonal thing, right? So let's say that's my thesis on the company. If I see where the price has gone down to a point where I think it's going to kind of level off. So what I mean by leveling off, if you remember when I'm showing the charts, when it looks like the company's price is pretty much staying the same, right? So through multiple reports, it's just trading the same way. What that tells me is that those who may want to sell the stock in the short term might have already sold, especially if it dipped a little and then found its way back up. So what I'm doing is that what I'm trying to predict, in a sense, is when the company is headed for a turnaround, right? So the company has not been doing well, but I think maybe through one of their reports, maybe through something I see in the paper. So sometimes there are things that will be announced in the paper about the company, but it's not mentioned in the report. That annoys me, by the way. That peeves me, because I think, of course, if you're gonna share something with the newspaper in an article, those who read the reports should see it in the report. So that I've always had an issue with that. But let's say that I picked up that information that the company has. We saw CPG saying earlier that they're going to increase their capacity, right, in terms of manufacturing capacity. So let's say that I'm thinking, okay, when they increase their capacity, it's going to take some time to roll out. They're going to be able to increase their ability to generate revenues. So let's say I'm thinking that 2 quarters from now, they're going to start to see growth. If they're going to start to see growth, I'm going to test that first quarter that's coming up to see whether or not they're on track. Meaning, on track doesn't necessarily reflect in the numbers, but on track could be maybe what the MD&A says, maybe what I call the company and I find out, maybe I speak to the CEO, who knows, right? But when I think that the price is at a point where it's not necessarily going to get any lower, and I think the price is steady, I may take a position at that point, because I'm projecting that 2 quarters from now, it's going to start recovering, and potentially that may see the price start to increase based on now investors feeling like the company has recovered and things are going to start doing well. So the short version of all of that I spent the last, what feels like half an hour to explain, I'm looking for a catalyst that will trigger the rebound of the company, right? That's how I phrase it. I'm looking for a catalyst that can bring growth. Now, the catalyst is not always performance. The catalyst can be an acquisition. The catalyst can be a new product or service. So a new catalyst can be anything. It could even be an announcement that has to do with the economy that could possibly impact the company, right? So hopefully that helps. What's my outlook on Wigton Energy? Just a quick snapshot. So Energy is a company that's listed as well. So Wigton, I don't know. I haven't looked at them in a while. I bought at IPO, sold shortly after, sold close to $1. I haven't looked at them. I did a stock review last year, I think. So I don't track them often enough, John, to be able to say anything meaningful. Antoine says, trying to get access to US stocks and recommendations on how the account can be funded. So I can tell you what I do. So I have 2 US bank accounts, and I transfer from my local USD account to the bank account in America. Then I use that account to fund the Interactive Brokers account, or you can just fund straight from a US account in Jamaica to your Interactive Brokers account. I always think it's good to have a local USD account. Yeah, right? So hopefully that helps. But if you're in our Telegram group, I think persons use Wise, but I've never used them personally. After a dividend payout date, how long does it take to get to your account? That depends. Do you have a mandate set up? You should get a mandate set up, because on that point, I'm not seeing one of my TransJamaica dividend checks. I need to check that out. So, but if it's, so let's say in TransJamaica case, it was the 24th that the payout is meant for. If you have a mandate, you should see it in your account within a couple of days. Now, there was some recent NCB issue. I hope you guys are aware of that. I'm not going to raise it here, but that's a concern that I wondered if that had anything to do with any delays. If you receive checks, then it's just a matter of when your mailman delivers it, right? Preference share versus common shares for dividend accumulation, which is better? It depends on what you're looking for. So preference shares give you a set return. Common shares can give you dividends and cap gains, right? But specifically your question says dividend accumulation. If you can't find a common share that whose dividends beat the preference share, I take the preference share if it's just for dividend accumulation. Do I own any preference shares personally? No, because I like the idea of both cap gains and dividends. All right, and say you get $1,000 to your dividend payout, how much you think you'll receive after tax? So Antoine addressed that, so thank you. Yes, you are charged a standard tax of 15%, so you would get $850, right? All right, so great questions. Let me check Instagram here. Okay, cool. So shout out to everybody over on Instagram. I think I've answered some good questions here. With vein basement. So it shouldn't take that long. If you haven't seen it, I would inquire about it. It shouldn't take long. Shouldn't take long at all. All right. Let me share the link to the Telegram group for you. Cherry Brandy. So Telegram. All right, and I'll ask again, guys, please take a minute to like the video. It really does help us to grow. So thanks in advance for those who have taken a moment to do that. All right, so I think that's it, guys. Hope you have a great weekend, and I am trying to go live at least once per week now, but I'm not gonna make any big announcement or anything like that, because it's really depending on how tired I am at the end of the week. So it's I don't think I went live last week because it's actually my wedding anniversary, so I went out of town, and so yeah, I had to kind of invest time in family and ensure that, celebrate with my wife and all of that. So that was great. That's why I didn't go live last week. And I know in a couple of weeks when we have our conference, I won't go live that Friday either. But Friday is, if I'm going live, Friday is the day that I'll go, or Monday. Mondays are Fridays. And we will have a video on Monday about how to understand your payslip. So if you think that would be useful for you, be sure to turn on notifications for the channel. And we've been sending out emails about getting special prices on our conference tickets. Guys, it's amazing what's going to be talked about at our conference this year. So if you are an investor but not an entrepreneur, you will still find value in the conference, and I'll tell you why. For me to invest now, I actually invest focused on the business, focused on the company. So your understanding of companies and investing and entrepreneurship, and business in general will actually help you to assess which companies are worth investing in. Right. So even if you don't own a business, which you probably should, because I would strongly encourage you, if you're looking for an additional stream of income, starting a business is a great idea. Right. And so the conference will help you to get off the ground, to get started. We'll have sessions to help you address things like, how to get recurring revenue, how to overcome the challenging seasons as an entrepreneur, and some other great sessions. So Akilia, yes, it will be available virtually. And I just remembered that this weekend, so starting now until Sunday evening, we have our best price ever on the tickets, right? So early bird just ended, and we just, decided to do a flash sale. So tickets are 50% off right now, right? So let me share the conference website. So learngrowinvestconference.com. And let me just share that site quickly here so that you guys can see. But yeah, we have we have a 50% off tickets, right? Yep. So flash sale happening on the tickets. So this is our best price. These prices, tomorrow's price will not be yesterday's price. I think that's how they say it. So get the tickets now if you're interested. So Akilia, now is the best time to buy. So if you're overseas, $100 is what you need to access 2 days, right? There are some conferences that we see for 2 to 4 hours in one day, charging what we charge for 2 days, right? So it's great value. It's great as an investor to understand business, right? So I think it'd be a great opportunity for you, even if you don't have a business, right? When would you sell a stock at a loss to buy another? Julian, great question. I wish you had asked me earlier. Short answer, when the opportunity cost to not sell is, so it comes down to opportunity cost. I don't know if I'll say it right. So let's say you have to choose between two options. Stock A, you're down 20%. It's been down for a while, not going anywhere. You want to get back to break even. Then you see a stock B that, let's say it's the same company that I mentioned that's going to have a turnaround, right, in 2 quarters. You really have a decision to make there. Do I hold this stock? Do I think it's going to recover in the 6 months and make a profit in 6 months? Versus this company that looks very likely that it's going to have a turnaround in 6 months and potentially give me some profit. So if I'm losing 20% here and I sell, I have to factor that into how much I'm going to make with the other one before I make the decision to buy. Hopefully that makes sense, right? So you are going to look to see if what you're giving up in terms of losses on one side, you're going to be able to make it back and then some, right? So I had a client recently who, when we were discussing her strategy, right, we spoke about a particular company, and that company was actually down, right? So we spoke almost a year ago, and we're talking about it, and we're talking about whether or not the company is likely to recover and stuff like that. I didn't think it was, and we met again recently, and it turns out that based on how things are shaping up, it's not looking likely that it's going to recover anytime soon. And one of the things we discussed was this same question, right? The opportunity cost, because the losses that she had in her portfolio then, they've gotten greater. So Julian, that 20% that you may be down right now, you have to ask yourself in 6 months, can I afford for it to go down more, right? versus another opportunity that looks like it may actually hold some value for you in the short term. So let me know if that helps you, but that's how I would think about it. Is it comes down to the opportunity cost. You need to assess that and make the investment decision that puts you in alignment with where you want to be in the period that is relevant for you. If it's a long-term stock, if it's in your portfolio long-term, a very simple answer would also be to average down, because when you average down, your average price goes down, your losses actually decrease as well. So that's also another strategy you can look at. All right, you are very welcome. If you need any help, feel free to reach out to me. I do one-on-one consultations. If you need coaching, well, there are no coaching slots right now. Sorry about that. A coaching slot should open in January. But if you need to meet with me one-on-one for an hour or so, then that can be arranged. All right. So guys, thank you so much. It's a Friday night and you're here. I really appreciate that. And I'll see you guys again very soon. And please do check out the conference website when you can. It's going to be our best conference ever. And I say that knowing that we've done two before. Not just the topics, but the quality of the event. And we're going to make a big announcement at the conference as well. So I can't wait to share that. Something that's going to change how we do things as Learn, Grow, Invest. And of course, I want to save it for the conference. So those who attend the conference will hear it first. Everybody else will probably hear it closer to next year, or in next year, right? But yeah. So I'll see you guys soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.